So, we'll talk about the conference, but what's the overall feedback that you have from investors? We have seen a large participation from domestic investors, but foreigners haven't really participated, though the selling has come down. Your take on that?
Well, as far as this year is concerned, I think some FI money inflow has resumed. What you say was certainly true for the last year, but this year it's reversed a little bit and the domestic flows continue to be strong. And as far as the conference is concerned, I would say the participation probably reflects the mood of strength in the market that we see.
Okay. What is the sense you are getting in terms of attitude to emerging markets and especially to India among the foreign delegates you have spoken with?
See, India has outperformed the other emerging markets this year. In fact, all but one or two of them. So the optimism certainly is quite high. And when I speak with FIs, there is no let-up, and it pretty much seems to be the expectation that we go back to the way it was before demonetization. My personal take is that it might not probably be that simple, and the foreigners especially are slightly more cautious, wanting the next quarter's results also to come in before really taking a final call. And also the markets have run up this year a little bit, so all the more reasons to be watchful on the numbers.
In fact, very eminent panel on your entire, in your entire conference today. Dr. Jim Walker, Adi Godrej, Bhaskar Bhatt. So would be really interesting to listen to all of them. Giri, good morning. You've been tracking telecom very closely, and that's the space that's come back into the limelight with the impending merger of Vodafone Idea, and now with RelJio coming into the fore as well. Is this a space that still offers opportunity, or do you think that there are too many risks involved?
No, I think the risks are gradually disappearing from the system, because in telecom the risk is quite significantly a function of the number of players. The more the number of players, the greater the competitive intensity. It seems that too many players now is gradually giving way to a scenario where there might be only 3 or 4 big players left. And there should be a healthy, reasonable concentration of market power in the hands of these 3-4 players compared to what we've seen in the last 7-8 years, because that has been very detrimental for their profitability and their ability to invest. They've still made the investments in spectrum and network, and there is a whole huge amount of capacity. The capacity utilizations in the system are less than 10%. So we need to move away from there to a level where there are a reasonable number of players left. For most markets across the world, that number is 3 to 4, and they make adequate cash flows, and the cash flows support future investments.
Okay.
So we are moving to that scenario.
Okay. Interesting, you'll have Samit Ghosh also talking, of course, from Ujjivan, and that's a space which has done remarkably well, Giri. Of course, post-demonetization, we have had 1 or 2 months of brutal correction, but most stocks have recovered. What's your view on that space?
Specifically about the microfinance space, I think it would be premature to take a call. If you just look at demonetization itself, there were a number of factors which may have allowed companies to not be forced to post very bad numbers. October was a very strong month. There could also be reaction time limitations. There could also be channel filling and a bit of upfronting of orders. But this can't carry on for 2 successive quarters is what I think. And therefore, in the March ending quarter, we'll probably see a bit of softness in the numbers. And as far as small finance banks and microfinance companies are concerned, it might not be very different. During the month of January, there was a good bit of progress on the remonetization. But January itself, from feedback that I get from different sources, was pretty bad in the north and much better off in the south. And southern companies and the rural economies in the south have not seen such sharp continued hits from demonetization as the northern belt has seen. Ujjivan is fairly well spread out now, and it's very conservative in the way it reports its numbers, and did so for the December ending quarter. I would say that in times of stress, you'll probably see the bank showing its true strength, and I wouldn't be worried about how Ujjivan does, especially in the medium term. But for the next couple of quarters, it will be a bit of touch and go. But we know those things.
Okay. Well, actually, your IIFL strategy note says that you are underweight on financials, but also on consumer discretionaries. And yet, your guests are a pretty consumer representing guys. Adi Godrej, Bhaskar Bhatt, Harsh Mariwala. Where do you stand in the consumption space? Do you still think there's juice in that space? Or do you think you'll want to wait for the post-GST scenario? What do you want to hear from these guys today?
See, the mix of speakers we would target to make sure that, all parts of the activity are represented, and wouldn't actually want to tune that to match our calls on sectors. But as far as the consumption space is concerned, 2-3 things are going for it, especially the staples consumption in my view. One is that we'll probably see food inflation ticking up a little bit, and globally the food index has stopped falling. Milk prices have stopped falling. We should probably see a restoration of the price levels of food items, which slumped briefly after demonetization. Plus, as the year goes by, we'll probably see continued emphasis by the government on some rural schemes with greater efficiency of targeting using the electronic means. They have shifted many schemes to that mode now. And as more and more schemes come into the DBT mode, as the government steps up the effort through its famous JAM Trinity and now the UPI also, we'll probably see the rural economy for both these factors get some support. So we could over the year see a discretionary to staples movement, and staples in my opinion should again start doing well.
Okay, one last question from my end. I was going through your top stock list, and in your mid caps, what catches my eye is the presence of City Union Bank. I mean, this space, this private sector, smaller banking space has gotten very, very excited lately. Is it because of potential M&A there, or is there a valuation catch up to the larger guys? And do you see more scope here?
Yeah, City Union Bank in particular is a bank we like because it's a very conservative bank. Banks typically give the best returns in the early part of their evolution. In the first 10 years or so, most banks give the highest capital appreciation. After they become a certain size, then you don't get the same sort of returns over a few years. But City Union Bank particularly is a very well organized bank, comfortable in its markets in the south, and we almost look at it as a quasi defensive play. We don't have any other name in the financial sector, and as far as the broader space of small banks is concerned, we'll have to see how it goes. We would rather trust the management of these banks and have a bit of track record to depend upon. We wouldn't say that we like everything in that space and the whole space is a buy. We actually are tilted slightly defensively, which if you look at our strategy note, we've also said that when the Nifty was around 8250, we thought that given the correction and given the fall in yields that had happened, the Nifty was broadly more or less in line. But since then, yields have moved up by about 40-50 basis points, and the Nifty has also gone up by 500 points. So we can't anymore say that the markets look as attractive and with as much value as it did at the beginning of the year. And given that, it seems that any optimism which is not very company specific would be something that we are not terribly comfortable with. We would be much more comfortable with having a stock specific approach and seeing if there is any particularly deserving bank, and City Union Bank falls in that space. But our other picks still hold, which is we favored HPCL, Power Grid, Motherson Sumi. We like all those stocks still and consider that they'll outperform the market in the remaining part of the year.
All right, Giri, we'll leave it at that.
Always good talking to you. Thanks a lot for taking time.